And let's get some business news for you now. Kate Moody's back with us in the studio. Hi there, Kate.
Hi, Laura.
We're going to start with that decision by the European Central Bank today.
Absolutely. Going out with a bang, really, as Mario Draghi nears the end of his term there. After months of warnings about sluggish growth, the ECB has now sprung back into action. In a reminder of just what's at stake, it once again cut back its forecast for economic growth. It's expecting the Eurozone bloc to expand just 1.1% this year and 1.2% next. As predicted, it cut its deposit rate further into negative territory. That means banks have to pay more to hold on to their money. It's an effort to encourage them to lend instead. And the ECB will be buying 20 billion euros worth of bonds per month starting in November. Well, earlier I asked markets analyst Craig Erlam whether the stimulus lives up to expectations and whether it will be enough.
It did live up to expectations. Whether it will be enough, I'm not quite convinced. Expectations in the markets were pretty much for a 10 basis point cut, maybe up to $30 billion of quantitative easing, but I think you're nitpicking at that point. The TLTROs were also expected, as was the tiered deposit rate. So all of these measures really came in line with expectations. In fact, it's probably more of a surprise that they managed to live up to such high expectations from a market's perspective. In terms of whether they'll work or not, you could ask, did they work previously? In many ways they did, but we've never really seen, for the last decade, inflation in the euro area at 2%. So it's clearly not helping it hit its inflation target, as Mario Draghi alluded to. We need to see a lot more from governments if that's going to happen.
Well, to that point, Mario Draghi did also urge governments to spend more in order to boost growth on a domestic level. It's a not so subtle suggestion to Germany in particular, as the Eurozone's economic powerhouse teeters on the edge of recession. Are the ECB's calls likely to be heard?
I mean, they're not going to be heard any more than they would have been if Mario Draghi hadn't been so explicit. I guess it's a lot easier to be brave when you know you're nearing the end of your term. Everyone's become a little bit more relaxed in their last week of work, and I feel like this is what we're seeing from Draghi. But I think it's very clear that this is the message he's trying to send. Countries who have the fiscal headroom need to invest in their economy more if we are going to see more sustained growth. For too long now, countries have leaned on the central banks to try and provide the growth that they can't provide because of these high debt levels. Well, now we're in a scenario where many of these central banks have utilised all their artillery. They're continuing to experiment with unconventional policy measures that one day we may look back on and say, do you know what, they actually caused more damage than good, and government should have stepped up sooner. And I feel like Mario Draghi is very much trying to send that parting shot today.
Craig Erlam with that analysis earlier. Well, let's see how markets responded to those announcements. We saw European investors welcoming the stimulus measures. The DAX and CAC 40 rising about 0.4% each there. Stocks in Milan outperforming up nearly 0.9% at the close. Wall Street's also up. It was boosted earlier by the announcement of a delay in some tariffs between the United States and China. It did pare back some of those earlier gains, though, after a White House official said the administration was not considering an interim deal with China. Google will pay the French government 945 million euros to avoid a court case over a tax dispute. About half of that is a fine for tax evasion, the rest back taxes. French fiscal authorities had requested payment of just over 1.1 billion euros. The tech giant has come under fire from governments across Europe for funneling profits through its headquarters in Ireland, thus reducing its tax bill via a legal loophole. It's prompted widespread efforts to find an international framework on taxing the so-called GAFA tech giants. That's Google, Apple, Facebook, and Amazon. The French government said Thursday's settlement was an important step.
It's a historic victory because it marks a new era. We have settled our dispute with Google. We have also gotten nearly the entire sum that we've been asking for from the company for years.
Well, meanwhile, France will try to block Facebook from rolling out its planned cryptocurrency in Europe. Finance Minister Bruno Le Maire didn't specify how he would prevent Libra from being launched. He has suggested that governments should work together on a public digital currency in order to get a foot in the door of the largely unregulated industry. Claire Rush reports.
The warning from Bruno Le Maire was clear. France will try to block Libra because the monetary sovereignty of countries is at stake. He added that in these conditions, we cannot authorize the development of Libra on European soil. Libra is the name of the new global digital currency being designed by Facebook, along with 27 other partners, including Visa, Uber, and Spotify. It would facilitate online commerce and provide financial services for the tech giant's roughly 2 billion users. But as in France, many officials around the world oppose Libra. They're worried about the destabilization of the global financial system, as well as regulation difficulties, money laundering, and privacy. But Libra told France 24 that it will collect the bare minimum of user data.
We are not going to store any customer-related data, so basically the information that would be stored for each transaction would be public addresses of the source and destination, the timestamp, and an amount. Any other data about the customers will not appear there and will not be stored at that level.
User data would be stored, however, by the companies that accept Libra as payment, so privacy could remain a sticking point, especially considering the extensive global reach of Libra's main backer, Facebook. The scope of the tech giant's operations makes it particularly difficult to regulate, and governments, already struggling to catch up with the rapidly expanding cryptocurrency market, fear they'll lose the ability to manage their economies.
The French government, meanwhile, says its customs officials are ready for a no-deal Brexit. Authorities ran a dress rehearsal of how ports and other checkpoints will operate in case the UK crashes out of the European Union without an exit deal. It would mean that any goods coming to or from the UK would be subject to additional checks, declarations, and probably tariffs. Documents from the British government have warned of huge traffic jams and shortages. France's budget minister said he was worried about the British preparations, but that his side was ready. And most businesses involved in the test run seemed optimistic that they could handle the changes if necessary.
A truck that does not have the right documents will not be able to board our ferry. It won't be blocked in England, it will be kept in France and not leave EU territory.
We already import parts from non-EU members, so we know how it works. It takes a little more time. We'll see as we go.
Rather upbeat there, Laura, as the prospect of a no-deal Brexit really does seem more and more realistic.
Yeah, some of the details of what might happen are really starting to sink in, aren't they? It is not long to go either. All right, Kate, thank you very much indeed. Kate Moody there with the business. We're going to take a